Good afternoon. My name is Zach Warmbrodt, and I'm Politico's financial services editor and co-author of our Morning Money newsletter. And I'm here today to host a panel on the new rules of Fintech. And today we're going to focus on digital assets and crypto because we have two of the industry's leaders here today. And we're going to break it down into kind of three different topics here. At the beginning, I really want to try to set the stage with what is the state of the art on how crypto and digital assets are being used. Then we want to get into some of the dramatic ups and downs that the industry has seen over the past couple years. I mean, just to set that up, I mean, it was about a $3 trillion market cap for crypto last year, and now it's a little less than half of that. So we'll get into why that is and what's next. And then looking forward, we're going to get into the policy challenges because governments around the world are still trying to get their arms around crypto trading and digital assets, and that could have a big impact on what's next for the market. So I just wanted to kick things off first and let Sydney Powell from Maple Finance and Jamil Nazarali from Edx Markets just talk to us for a few minutes about who they are and their firms, and I'll let Sid start.
Thanks, Zach. So my name's Sid. I co-founded Maple Finance. You can think of us as an institutional lender, not dissimilar to a credit fund, but operating on chain. And what I mean by that is we would lend to borrowers who might include funds, trading firms, but what's different is that the loans settle on chain, so the money changes hands on chain, the repayments are all captured on chain, and we've done about $2.6 billion in loans so far. My background and my DNA was in banking and finance, so I used to do securitization, and then I was running treasury at a smaller lending company, so that gave me an opportunity to kind of see end-to-end what goes into running a lending business and kind of seeing the pain points that smaller lending firms deal with in terms of manual processes. And so really, the light bulb that went off for me with Maple was the possibility of automating all of this, and what could that mean for running a lending business, running a credit fund, and could you pass these savings on to customers at the end of the day? So we've been operating for about 2 years, and I have the good fortune to be based here out of Miami.
Thanks, Sid. Jamil Nazarali, I'm CEO of Edx Markets. And Edx Markets is a new digital exchange that was founded by Fidelity, Schwab, Citadel Securities, Virtu, and Sequoia. And the idea behind EDX is that when the firms that founded our exchange were entering the market, they realized that the digital market lacked a lot of the protections that we've all come to take for granted in traditional finance. So that was really vividly displayed in the blow up of FTX and a number of other firms. And so we are bringing some of the best practices from traditional finance so that investors can trade digital assets in a secure way and with much lower cost than the existing alternatives.
Thank you. So crypto, what is it good for? And I guess first, just to set the stage, I mean, a show of hands, who has touched crypto, invests in crypto? Do we have any users in the room? Okay. That's a good starting place.
There's a few.
That really kind of addresses the elephant in the room for consumers and policymakers, which is what's the real utility of digital assets? What is it going to do for society? So Jamil, I mean, what is, if you're talking to people who are trying to understand that, what do you tell them?
Yeah, it's interesting because crypto is a global asset, and the use case is probably the weakest in the U.S. Because we have such a robust financial system, right? But if you go outside of the U.S. in countries where they have capital controls, in countries where much larger percentage of the population is unbanked, in countries where they're doing overseas remittances to a greater extent, I mean, all those things happen in the U.S., but and in countries that whose currencies go through rapid inflation, the use case for cryptocurrencies is much greater. And really, cryptocurrencies are like money. right? It's a store of value. Again, much more important when you have less confidence in your local currency. It allows people to send money peer to peer with no intermediary. That should drive down costs, and it is also a store of value. So you can think of how superior it is to gold if everyone agrees on the value and they want an alternative to currencies. It's a lot better than the existing alternatives.
And Sid, I mean, what do you see as the most promising use cases on the horizon?
NFTs. No, I'm kidding.
That's about a year old, right?
So I come at it more from kind of the application layer. So rather than looking at it as kind of a tradable asset, which, we do touch that a little bit in the form of collateral against loans. But I look at it in terms of how do you recreate financial products? And so some of the more promising ones I see are like payment processing. So if you look at groups like Visa, MasterCard, PayPal, they've been really early in doing research and putting out products and white papers on crypto. PayPal is doing their stablecoin. I think part of the attraction there is they stand to lose the most if people start transacting by sending stablecoins or a cryptocurrency, for example, to pay for goods. So if you can tap and pay with USDC, so a stablecoin instead of Visa or MasterCard, well, there goes a 3% fee that's currently going to those payment processing providers. So I think that's going to be a huge application. I also see lending and borrowing, which is, of course, Maple's space, but I ultimately see most lending and borrowing taking place on a blockchain, if not next year or the year after, probably within 5 or 10 years, because it's instant settlement, it's lower cost, it's recordable, it's traceable, it's much easier to manage. So those are two key use cases I see.
And you mentioned NFTs, which was kind of a joke, but I guess, Jamil, like, what do you see as kind of being overhyped? I mean, is there anything out there where crypto has just not proven itself to be a good utility or technology?
Sorry, could you repeat that? What?
Oh, I mean, what do you think are there any areas where people are over-promising with crypto?
There are so many areas where people are over-promising on crypto. It's a very promising technology, and as Sid said, there's a lot of different applications of blockchain outside of cryptocurrencies, right? And so people should separate cryptocurrencies from the technology that has its basis in it. But I think that's where we're going to see the most exciting innovations coming from the use of blockchain technology for a number of different applications. Whether it's in the banking system, whether it's controlling inventory, there's just so many potential use cases, and I think that's where most of the future innovations will come.
Yeah, I think in terms of what's been overhyped, I mean, NFTs are kind of an obvious example, but if you try and keep an open mind, it's not hard to see that maybe in the future, the title to your house is an NFT that records all the key information about it and that sits in a registry run by the state or your local government. If we bring it back to kind of today, though, certainly NFTs as a collectible item that you buy and then the speculate on the price of pieces of art, I think that's probably overhyped. Gaming is one that I see a lot of. So, everyone was really interested in the metaverse. We saw a lot of games where you have in-game economies where you can buy items but take them out of the game, sell them on a marketplace. And that's something where I think probably the hype around it got ahead of the actual traction and the feature set today. But if we look at what's happening today, most institutions are showing a lot of interest in blockchain-based projects internally, whether it's for settling bonds, international finance, trade finance, payment processing. And so I'd say the actual traction adoption is now kind of creeping ahead, and it's probably the case that valuations will need to catch up again in another year or two.
So ups and downs. So the crypto's had a few over the past year or so. I put out some numbers, about the market cap coming down pretty dramatically. We had the guilty verdict of FTX founder Sam Bankman-Fried last week, and he was really a leader in the U.S. and as someone who was reporting on crypto in Washington, very prominent, very influential, and it was kind of a hugely impactful fall from that perspective, but also because his firm was tied to so many others, and it's had a ripple effect. So, Sid, I mean, what has it been like navigating that environment, and how has Maple been impacted by that? And I think you did have some business with Alameda, right?
We did.
Yeah.
We did. So Maple's core business was doing institutional lending. So we dealt with trading firms. And Alameda, which was the hedge fund tied to FTX, was a very, very prominent trading firm and market maker. So we had some loans outstanding to them from late 2021 to early 2022. But fortunately, we actually closed them out after we saw one of their updated balance sheets. And it didn't indicate fraud. It just indicated a weaker borrower and one that you probably wouldn't want to lend to. The issue was, of course, as you alluded to, Zach, FTX and Alameda were tied to a lot of other firms in the space. You had this kind of contagion risk where once Luna happened, so Luna was a default in around May, then you had 3AC, which was a prominent Singaporean hedge fund, Celsius, which was based here, and then kind of a cascade of defaults. The contagion kept spreading. And so what this induced in the market was everybody wanted to go back to cash, take their money out of businesses, lending businesses, like what we're doing. And so you saw this kind of bottom out, and competing with this, you had treasury bill yields rising. So if you think start of 2022, treasury bill yields 0, lending in crypto 10, 11, 12%. And then by the end of the year, you're looking at challenged yields in lending in crypto because of default rates, but also T-bill yields at 5%. So it sucked all the air out of the room. And how people had to react was reframing what products people wanted in the market. So you've seen this year one of the biggest growth trends has been tokenized T-bills. So you can think of this as just a way to access kind of internet first or fintech first. But we've seen over 600 million in T-bills kind of distributed and held indirectly on chain, as well as a shift back towards collateralized lending. So trying to fix some of the issues that occurred in those lending firms and the prominent defaults last year. But I'd say the market started to heal second half of the year, recovered from that fallout.
And Jamil, I mean, your EDX operates kind of at the center, right? I mean, you're where people are going to buy and sell some of these products. I mean, how would you kind of describe the state of the crypto market right now?
We're definitely in a crypto winter that started before FTX blew up and became much worse after its blow up. But I think from our perspective, it's really been a two-edged sword. On the other hand, on the one hand, crypto volumes are way down. Valuations are down from their peak, but they're up quite a bit this year. But on the other hand, after FTX happened, we had a lot of firms approach us and say, now we understand what you're trying to do and why you're trying to do it. Now we understand the value of a non-custodial exchange. And now we understand why a broker-dealer has to be separated from an exchange. And we were in the middle of a fundraising when FTX blew up. And despite valuations being crushed right after, despite a lot of venture capital money leaving, we were able to complete our fundraising round at double our previous valuation with no change to, not a single investor dropped out. So I think that I think it's been both good and bad for us.
And one of the hot trends right now in the crypto world is that traditional financial institutions, well-known Wall Street names, are interested, and there's so much interest around, like BlackRock is trying to launch a Bitcoin ETF. So it's an easier way for people to invest in crypto. And that's really been moving the market. I mean, speculation about, is the SEC going to approve that or not? And so I wanted to dig into that trend and go back to you, Jamil. I mean, what was your journey? Because you did come from that kind of traditional finance world, but how did you get into this?
Yeah, so the way I got into it is I was at Citadel Securities for 10 years. And for those of you who don't know, Citadel Securities is the largest market maker in the world. For those of you who don't know what a market maker is the firm that stands ready to buy and sell a number of different securities when institutions need them to. So if you've got an account with whether it's Fidelity or Schwab or Merrill Lynch or Morgan Stanley, Vanguard, whoever, when you go to buy or sell a stock, that broker will send their order to a market maker to be filled. Many retail clients were trading cryptocurrencies, and their brokers were looking for market makers to get liquidity for those trades. And so when Citadel went to enter the market, it was very concerned with the market structure in crypto because most of the exchanges there were not subject to the same rules as in the securities market. Over the decades, there's been some really strong investor protections built up, and by and large, many of the cryptocurrency exchanges, brokers, etc., didn't have those same protections, right? That's why FTX blew up and lost a lot of customer assets because they didn't segregate customer assets from company assets. And so when Citadel entered the market, they said, look, we hate the current market. We want to get together with other industry leaders and build an exchange that looks and feels a lot like the exchanges that most people know and understand: New York Stock Exchange, NASDAQ, CME, etc. And so they got together with the other firms that I mentioned to build EDX. The other thing that EDX does is it makes trading much more efficient. So here's an interesting stat for you. If you were to buy $1,000 of Bitcoin on most exchanges in the US and then immediately sell it, the price hasn't moved at all. That trade would probably cost you $50 or $60 between what you're paying in bid-ask spread and what you're paying in commissions. So $50 or $60. If you did that same trade in an ETF, which has a similar market cap to Bitcoin, that same trade would probably cost you 2 or 3 cents. So that highlights how inefficient it is and how expensive it is to trade cryptocurrencies, and what the firms that are founding members of EDX are going to do is bring those efficiencies to the trading cryptocurrencies so that over time it's not going to be as expensive to trade them.
How do you bring those efficiencies?
So we bring those efficiencies, one by we're a match-only exchange, so we're not a broker-dealer. We don't have the same commission structures. And you bring competition, you make everything electronic, you have a number of different liquidity providers. So there's a number of different things that you do to do that.
I mean, has there been a sense of like FOMO on Wall Street the last few years that they weren't participating in this, but there was too many, obviously they saw things at FTX they didn't like, but what was your sense of that, Sid?
I think there was FOMO on Wall Street. We did and still do talk to a lot of Wall Street firms. Most of the people who staffed out these companies came from Wall Street, though. So the issue was they saw the opportunity, they couldn't get internal buy-in to do something, so they just left and started their own companies or joined existing companies in the space. I think As you watch 2022 play out, though, all those companies kind of got cold feet or shelved or mothballed their projects that they were doing. But it's starting to come back this year. There's a big trend around this idea of tokenization of assets. And so if you're in an environment where it's tough to fundraise, which it is for a lot of credit funds, and unless you're in kind of private credit, but a lot of funds are finding it's difficult to raise, and so they're thinking about distribution. And so this idea of I could tokenize an LP interest in my fund and have that token trade on a secondary market so people could use it as collateral. They could exit it at much lower cost than they otherwise would be able to. And so I think these projects are keeping the institutional interest alive, but you really need to see more price action, so number go up, to bring a lot of them back in, because that's when their customers will start asking about, are they offering either custody of cryptocurrency assets or brokerage or selling it or other products. That's kind of what we saw in 2021 and early 2022. So it will come back. It's definitely not dead. It's, every new technology goes through cycles.
And Jamil, I mean, just given that FTX is back in the news with the SBF verdict, I mean, could that cause some cold feet again, on Wall Street and some of these more traditional firms, or are you picking that up?
I think Sid is right that this is going to be largely driven by the end customers of those institutions, right? So I think it's going to be driven by one of two things, right? So additional demand by those end customers, and certainly SBF is a reminder to everyone of some of the excesses and downsides that happened in digital trading. So, but I think people have pretty short memories and they'll move beyond that. But the second thing is regulatory clarity, right? There's a lot of institutions that are staying out of trading cryptocurrencies because of the regulatory uncertainty, whether a token is a commodity or a security. There's an SEC staff bulletin, SAB 121, which makes it very capital prohibitive for banks to not only trade digital assets, but even if their customers trade those digital assets. And so that's kept a lot of the banks out of the space. If we had a different regulatory regime, I think that you would see a very different cryptocurrency market.
I do tend to agree with that. I would say when we talk to a lot of the large market makers in traditional finance, a lot of them will say, well, we're SEC regulated. The SEC clearly doesn't like this sector, so we're going to hold off trading it until we have more clarity there. This is a bit of a double-edged sword, because it's this reticence of large institutions to kind of participate in the sector that creates opportunities for startups and newer firms like each of ours to kind of establish a bit of a footprint in the market presence. So we both would like more regulatory clarity to be able to deal with larger firms as customers, but we also don't want a flood of competition.
And maybe this is a question for Jamil, but I mean, when you look at the future of your firm, I mean, how much of that rests on, crypto being part of someone's 401k someday? Just like, I could, if my company offers Vanguard, they'll offer me a crypto fund. I mean, is that part of the outlook here? Well,
I will say our opportunity set is much bigger if traditional finance starts offering crypto to their end clients, because our venue is really built to enable those firms to execute their customer orders. So our exchange is not built for those customers who have their accounts with a Coinbase or a Kraken or cryptocurrency.com. Our exchange was really founded to help those investors who want to trade cryptocurrencies through their existing trusted intermediaries like Fidelity, and hopefully future there'll be more of them.
So Sid, what is your market outlook, for going into 2024? Are things looking brighter or still some headwinds? Can you give us some color there?
Yeah, famous last words offering price predictions, but I'll have a crack at it. So in terms of market cycles, I think you'll see another bull market in 2024 or 2025. I don't know exactly when it would be, and I'd be kind of silly to guess. But if you just look at the timing, generally it follows these kind of 4-year cycles. So we've been in bear market since last year. The last time this occurred, we went from bear market in 2018 to bull again in 2020. But it was a very different macro environment. So you had massive fiscal stimulus, and so it's hard to predict what would kick something off. You have certain catalysts like a spot Bitcoin ETF approval, regulatory clarity, potentially if there were a change in administration to a more favorable one that's more favorable to the sector. Each of these could kind of be a catalyst to kick off more of a bull run. But yeah, so I'd say heading to the end of 2023, we've definitely seen positive movement in kind of market prices and also a settling of sentiment. So everybody's now over their concerns about contagion, because we've seen the lists of all the creditors and the debtors, so we know that contagion is done from 2022, and we're seeing catalysts like the PayPal stablecoin, which in 2020 would have been huge news. In 2023, amidst everything else that has happened, it's kind of got sort of breezed past by a lot of people. But anyway, so positive for 2024.
Jamil, do you have a different view or different opportunities or pain points?
I have no idea if cryptocurrencies are going up, if Bitcoin is going up, down, when it's doing it. But I will say that we are creating a better, more secure, more efficient way for individuals and investors to trade it.
And you've already brought up this topic a bunch of times, and it just shows how important it is, and that's the policy environment for crypto and digital assets going forward. And I guess I want to ask you, Sid, I don't know, are we on a path where crypto is being given a sense of legitimacy by governments, or does it depend on where you're based? But what is your high level view?
It does, of course, depend on where you're based, because regulation is not uniform between countries. But if you look abroad, you can see sense of legitimacy in Europe with their comprehensive MiCA framework. Same with Singapore, with the Mass Monetary Authority of Singapore putting out something. Hong Kong has also granted licenses now for cryptocurrency trading and custody firms. And so I'd say globally, there's an air of legitimacy now. The US has, of course, lagged behind a bit here, but I'm actually confident that they'll get it right eventually. So if you look, you have legislative, judiciary, and executive, and we're kind of seeing the executive doesn't much like the sector, which we can see through the enforcement actions. But there will be a change of leadership, end of next year in both the SEC, so the prime regulator for the space, and if potentially there were administrative change through the election, that would also change things. But the courts have actually been relatively protective. So Ripple case, Grayscale, all sort of reflecting positive sentiment around the sector and received positively by the market. But also the legislators actually have a reasonably positive view when you look at the stablecoin bill, which was kind of proposed, and the market structure bill. So
in the House.
Yeah, in the House. Definitely not anywhere near clearing, but it at least shows that legislators view that this is a sector where there is some innovation that's worth keeping in the country rather than having all the startups go abroad.
I mean, given the experience you just laid out with other jurisdictions, I mean, how bifurcated is the market globally because of these regulatory differences? I mean, and it's very clear the U.S. is taking a very skeptical approach.
Yeah, the market is now kind of bifurcated between U.S. and ex-U.S. And so a lot of lawyers, here within the U.S. are kind of advocating for their clients to either redomicile. Jurisdictions that are picking people up are Bermuda is viewed very favorably. Cayman is, of course, traditional bellwether for hedge funds. But also now Europe with MiCA and Singapore. I was from Australia originally, and a lot of the founders who came through in my cohort have now, redomiciled to Singapore from Australia for that reason. But I would say,
is that because it's easier, or just why? Why is that?
two things. So perception that it's more of a commercial and fintech hub. And then the second one was of just the reticence of the Australian, like the Australian regulator is caught up in the narrative of kind of consumer protection and that there's more harm than good in this sector at the moment. And so they're still years away from kind of having any meaningful progress. I was just there 2 weeks ago for another conference, speaking to some of the banks and major asset managers there. And the sense is that if they want to do something, they'll go up to Singapore, incorporate, and then either try and offer the product in Australia or just stick to the rest of the APAC market.
So Jamil, he touched on, we have an election coming up next year in the U.S. As a U.S.-based organization. I mean, how far could the pendulum swing? Let's assume it's a Biden versus Trump. I mean, is there any hope that a Biden second term would treat crypto any differently, and that Trump would treat it any differently, or his appointees?
Yeah. So if there's a second Biden administration, there's probably not going to be a little bit change. There's probably not going to be a lot of change. There might be some at the edges, short of some court decisions. But even then, I think that the regulators are able to dissuade firms from doing things. So I've met with hedge funds that have cryptocurrency trading operations. They want to trade it because it's very volatile. They think they're good at trading and they can make money trading it. But they've gotten, they've been told by regulators, if you trade digital currencies, we're going to come in, we're going to audit everything you do, we're going to look to make sure that it's segregated from the rest of your business. And no one wants those kinds of intrusions into their businesses. And so it's a lot easier for them to just not do it. So even if some of the court cases kind of go in favor of the companies, I think there will be some changes, but not a really dramatic change. If, on the other hand, and you're assuming Trump is the nominee, but let's just say there's not a Biden administration, I do think that there are poised to be some pretty dramatic changes because some of the things that the administration has done to dissuade cryptocurrency changes can be removed very, very quickly, right? So the SEC just has to pass another staff accounting interpretation of SAB 121. All of a sudden, banks can enter it. They can stop with some of their examinations and enforcement actions, and you could see a very, very dramatic change in the fortunes of cryptocurrencies.
And this all revolves around the SEC chairman, Gary Gensler, right? I mean, that's what you're talking.
That's a very big part of it. Yes.
But you're saying if under a Republican administration, there would likely be an SEC chair who
there will certainly be. There's no way a Republican administration is going to allow Gary Gensler.
Someone with a different approach. I mean, not him. They obviously wouldn't keep him, but yeah.
Yes, for sure. Yeah. Yes, and you saw that under Jay Clayton. He was much more laissez-faire about cryptocurrencies and allowing them to.
I mean, are crypto firms just kind of waiting out Gensler at this point?
I think a lot of them are. Oh, sorry. I think a lot of them are going internationally, right? Because who knows what's going to happen?
Yeah, you see firms, like Gemini, Coinbase, kind of setting up international arms to offer new products. Firms who are kind of startups who are here, like in our case, we're fortunate because we do lending and borrowing, so we can offer things under, like Reg D exemptions, for example, or just primarily serve offshore customers. But anyone who's trying to do something in decentralized finance, might be like a derivative or something like that, they just have to go offshore for the time being.
And the other big topic where there's an intersection between this space and the government is the idea of central bank digital currency. So that would be where the U.S. Federal Reserve, for example, would issue a new kind of digital dollar that's using blockchain technology, and the Fed is studying this. Other central banks around the world are at different stages of looking at this. Sid, I mean, is your firm having any kind of interactions with the CBDC space or potentially?
We've looked at it a bit. So we've participated in discussions with kind of, government or government adjacent firms who are doing research on the area. My own view is that I don't think CBDCs will take off in the way that it's the state providing a service. Particularly here, we're more about kind of private enterprise. And so I think in the same way that telco is not, telco networks are not built by the state in the US, it would be private providers who are just subject to regulation and audits, but you'd have multiple of them. They're going to be better at hiring engineers, and then you just kind of ensure that there's fair competition between them so that people are getting the best service at the lowest cost. But I think that's the way it'll play out. I think CBDCs are probably more the province of kind of countries like China at this stage.
Well, on that note, I think that's where we're going to have to leave it. We're a little over time, but thank you so much, Jamil and Sid, for this fascinating conversation.